started in that country. But first, let's start with this. Let's certainly start on Wall Street, where it has been a hugely turbulent week. But even by these standards, yesterday, Thursday, was nothing short of explosive. US shares saw their biggest one-day plunge in at least 6 months. And you've got to remember, this comes just after the biggest rally in a year on Wednesday, which itself followed a major sell-off on Tuesday. What on earth is going on? Let me show you some of these numbers. It is roller coaster rides. The Dow Jones Industrial Average, it tumbled almost 335 points to end lower at 2%. The S&P 500, the Nasdaq, closed down at around the same sort of percentage points. But let me show you this, something else. The S&P's VIX index, what's that? Well, basically, it's a measure of volatility. It's known as the fear index, and it surged. It went the other way. It went up 24% yesterday. Now, markets have not been this volatile since the summer of 2011, when the US had its credit rating cut. So again, what is going on? Well, Victoria Fritz has this report from New York.
The wild ride on stock markets continues. We saw the biggest plunge in the Dow just the day after the biggest rise. And this sort of volatility is becoming something of a pattern. Let me tell you what's going on. The first thing is the promise of ultra-low interest rates continuing across the world for some time. Now, that causes a surge in optimism because that era of cheap money has really been underpinning the bull market for the last 5 years. But we are at an inflection point. You know, there is open dialogue, open discussion at places like the Federal Reserve, the Central Bank of the United States, about when interest rates will rise. We're also coming to the end of the bond buying stimulus program in the United States. That's coming to an end at the end of this month. So every time we talk about that, every time the consensus shifts, we see a stampede for the exit from investors. The other thing that is really weighing on investors' minds is the global economic recovery. Because what we're seeing here is, although we're seeing the United States and the UK rebounding, there are areas of weakness opening up across Europe and across areas of Asia as well. And when it comes to Europe and the #1 economy there, Germany, we're seeing a weakness in exports. They're falling at the moment at their fastest rate since the financial crisis. And that has a lot of people worried because there is a real issue when it comes to the timing of these two things. We're perhaps looking at the withdrawal of central bank and government support just at a time where we're seeing weakness develop across large parts of the economy. Now, this will be a worry to all investors and the millions of people with pensions and trusts invested in the stock markets.
Yeah, Fritzy talking to us from